All right, what's up? So today we're going to go through and we're going to look at the ways that I go through and research companies and do a little fundamental analysis, and then also use that fundamental analysis to lead me down like a technical analysis path to find a trading setup. So the company that I want to go through today is MU, which is in the technology sector, and it's in the semiconductor industry. All right. So if I am on TradingView, which is the first resource that I personally like to use, I love using TradingView. If you are anywhere from the 1 hour to the daily time frame, if you look at the bottom of your charts, you'll see the E and the D. So the D is showing us the dividend payout days, which this is not bad for, this is actually really good for Micron. 11 cents a quarter, almost 12 cents a quarter, not mad at that. And then the E is showing us earnings. So if we see like the red E, it's telling us that they missed earnings in one of these categories versus like a green E is telling us that it beat earnings in one of these. And the purple is showing us upcoming earnings. So if we have the earnings pulled up, or if you have the dividends, if you do that, either one. But if we have the earnings pulled up and then you click on the more financials, then all of this prettiness pops up here. So there's some things that we want to look at whenever we are dissecting a company and we're in their financial statements and their incomes, balance sheet, all of that, right? And I always just say, to keep it in the simplest terms, you want to see if they are increasing and decreasing. Don't ask me what, just everything. I want to know, are they increasing or decreasing their revenue, their dividend payout? Even I want to go so far as to see, are they increasing and decreasing as compared to their employee turnover rate, things like that, right? Because, and one of my best example that I use for that is when we think about Amazon. If you know anyone who works in an Amazon warehouse, or has worked in an Amazon warehouse, then you already know that they don't really have the best employee retainment statistics. So I like to look at things like that. Even going as deep as far as, are you increasing or decreasing purposefully the amount of employees that you have? So one of the first things that I'm going to come in and look at is, of course, the overview, because I want to know what this company is doing specifically, what it is that they're out there doing. So if we look at Micron, again, it's in the semiconductor industry. So it includes memory products sold into cloud server, enterprise, client graphics, and networking markets. All right. So one thing that I really like about MU as well is that they tend to get a lot of like government contracts. They put a lot of their semiconductors in military vehicles. So I rocks with that. I rock with that. Mean a little something, something to me. And this also consists of memory and storage products sold into automotive, industrial, and consumer markets. It's a fairly new company, founded in 1978. All right. Now, we already went to see that they do pay out dividends. So it's not like, are they paying out the most? No. But when I look, I see that they are increasing their dividend payout. It's not, it hasn't been every year, because we haven't had a dividend payout or an increase in 2023 thus far. But from 2021, from 10 cents, and then 22, 12 cents coming in here. So I like that. They're increasing their dividend payouts, because what dividends are, it's a portion of the company's earnings that they are choosing to give back to their shareholders, to pay back to their shareholders. So if you got the money to pay dividends, I like that, and you're increasing them, you got to be doing pretty good. So then that's going to have me automatically come over here, and I want to look at their earnings and revenue, especially because that's really mostly the first thing that we look at, or the two main things that we're looking at when an earnings report comes out. So I'm going to always switch it over to annual. So annually, if I'm looking at their earnings per share, well, first off, I do like to see that annually, year over year, they are beating expectations. I love that, actually. Year over year, they're beating expectations. And as far as revenue, now they did have a decrease last year. And now a lot of that, then I have to sit and think about what company am I looking at. And I know that with semiconductors, there was, of course, a supply chain issue. All right. We already saw that with earnings as far as like when Qualcomm had their earnings, like and AMD as well, that they there's a supply chain issue. So I'm not really surprised by that. And honestly, this isn't that bad of a decrease. 0.35, that's not, all in all, that's not that bad. Now I'm going to come over here and click on statements. And I always like to make sure that I'm looking at this annually. And you can click to highlight and unhighlight these. I personally like to just have one thing highlighted at once. And we're going to look at the income statement first. Actually, and we're still over here on annual. So I want to look at their total revenue. So before we go into that, I also do want to tell y'all that one of the main things that makes me love doing my research here on, or starting my research here on TradingView, is that so a lot of this stuff, when people are going through here, what stops them is not that they can't look at these numbers and see if they're increasing or decreasing. People are just like, okay, what is net income before discontinued operations? What does that mean? The beautiful thing about TradingView is that if you hover over one of these, it's going to pull up a little question mark, and it's going to give you the definition. Okay, it'll give you the definition, tell you why it's important, and how it's calculated. So I absolutely love this. It makes it so easy for you to study. Like there's no excuse. There's no reason that any of us should be able to, or that any of us should say, well, I don't know what that means, when we have a resource like here that's gonna totally break it down for us. It's just gonna require you to spend a little extra time to study the definition. It is what it is. So, like I said, the first thing that I want to look at is the revenue year over year. So again, I'm aware of the company that I'm looking at, semiconductors. So to see from 2019 to 2020 that there was a decrease, supply chain issue, I'm not surprised. But this increase that they have had post-pandemic, I love this, a 29% increase. Now that did and then went up to 30.7 billion, an 11% increase. And the TTM stands for trailing 12 months. So from what is it? Let's say May 2023 to May 2022, right? This is what this is. So about 23 billion, and we're only halfway through the year. It's only month 5. So wouldn't be surprised if this is also another increase here. It's about 7 billion behind there. That's pretty good with 7 months left in the year. All right. And then the next thing I want to go down to is to look at their operating income. Well, I'll leave all those highlighted so we just see. So the operating income, not mad at that. That is a really big increase there from the 6.8 billion to the 9.7. All right, now I'm going to look at their equity in earnings. So I want to click on this one, okay, because the equity in earnings tends to get people. So what this is this representing the portion of earnings or losses of a subsidiary whose financial accounts are not consolidated with the controlling company's accounts. All right, I know that's kind of a lot, but I do like to see that, and okay, about down like 7 million. All right. And then I want to come down to the total operating expenses. I want to see just how much does it cost for this company to operate, to keep it in business. All right. Now, when we're looking at the total operating expenses, it's including everything that the company does day to day, which is the rent, the equipment, inventory, marketing, labor, which is going to include the employees, right? Cost, insurance, duties, funds for research, all of that. I want to know how much is it costing it to keep this company going. So last year, we'll just look at 2022, it was 20.9 billion. to keep it going, which was not that big of they didn't have to put out that much more here. So I'm not mad at that. And I want to compare it to their revenue. All right, so you made 30, and the revenue, I do want to show y'all that this is after. It shows how much money a company generates from selling its goods or products over a specific time. All right, it's calculated by multiplying the number of goods and or services sold by the like blah blah, how much they make. So if they made 30.7 billion, and then overall it cost them 20.9 billion to operate, right? So we got us about like an additional $10 billion in there from how much they made to how much it cost them to operate. So that's something that I want to keep in mind there. Always make sure that the revenue is over the operating expenses. Other than that, you just negative, right? Whatever you make, you automatically, whatever this company is making, they automatically have to turn around and spend it to keep the doors open. All right, so now I'm going to come over to the balance sheet, and it's the assets and the liabilities and the debt for me, y'all. It's the assets, liabilities, and the debt for me. I'm definitely in tune with these. Oh, I do want to show y'all this too. So you see how like on the total revenue, it has like this orange here. The operating income has the purple, and equity is the yellow. That's how you know. And also this pops up there, right? Letting you know, but this is how you know, so as you're comparing the bars, which ones they are. So I love that too. Which let's come here actually. So if we take off everything, so we just do the revenue and then we have the total operating expenses. See how I can compare it up here? Let me take off assets. So see how we're comparing the revenue to their operating expenses. You can just visually see that. Love that. All right. All right, so let's come back over here to our balance sheet, and now we want to throw in the assets. Let's throw assets up in here with it, okay? So their assets, let's click on this definition, is just everything that they own. It's their property, including tangible and intangible, their investments, cash and debt, all right? That's all it is. So we are seeing nothing but increases in here. They're able to increase their assets. Love that. All right. I'm going to come down to the liabilities in here, and I could go in and look, and actually we're going to do that. And I would want to know, seeing this, a negative 37.6% decrease in liabilities. I want to know what happened in 2018. All right. Now the liabilities is just what's going to, the responsibilities of a company. I need to remember that adjective, the responsibilities of a company. So it's going to include the debt to creditors and their suppliers, contracts, funds, and services, all of that. All right. So it's their obligations, which can lead to additional risk if a company has too many liabilities. Assets adds value to your company. All right. Liabilities decrease the company's value and their equity. So the more your assets outweigh your liabilities, the stronger your company is, of course, right? So this is what and of course I look at these comparative to each other year over year. So I see that we'll say in 2022, they had 66 billion in assets, which is an asset, which is helps the company's overall health, right? And then 15.7 billion in liabilities, which decreases a company's worth. So I like the odds of that. 66 billion to 15 billion. I'm liking the odds of that. All right. And then of course, I need to know the total debt. I got to see the total debt. Are you decreasing or increasing your debt? Because my goodness. All right. We see in here from 19 to 2020, which makes sense, pandemic, that their debt increased. That makes a lot of sense. All right. But I do want to say, but when we're looking at their debt in comparison to their total revenue is the orange one, debt is this last one, right? I love to see it. They're making way more than what they are indebted, than what they have debted. Love that. All right. So we can see that we gotta increase on our debt a little bit, which makes sense. Again, supply chain issue. I'm just going to forever say that. Now let's dive into the difference between the total debt and net debt. So the total debt is the long-term debt and short-term. All right. So it's all of it. The net debt is the total debt minus cash and short-term investments. So the net debt is taking away like any free cash flow that they have or their investment. So we could say like their assets, right? Minus like the free cash flow and their assets. That is going to be the net debt. Definitely want to make sure that this is, what is the amount of debt that will remain after a company has paid off as much debt as possible shows how well a company can handle its current obligations. Yes. So I actually really like this, that their debt is in the negative. This is really good. We kind of increase a little bit, but we like that there. All right. And then we're going to go over to take that off. And then we're going to go over to the cash flow. Main thing that I'm looking at, honestly, is the free cash flow. This is the first thing that I want to see, because if I want to know, do y'all got some money going on? Because it's okay to have debt. Credit is good. Credit is good. As long as you have the money to pay it, credit is good. And we see, let's take free cash flow off. And we see we got the revenue to pay the debt, right? Well, whatever. So I'm not upset with that. Now, let's throw in their free cash flow. Now, 2016, they had no cash, but we see it coming in. This makes sense in here, right? These negative free cash flow. Again, supply chain issue, baby. 2021, they came back hot. Increased it last year. This year, my goodness. Thus far, where their money going? Oh, that Coke is so good. All right. Now let's come over here and look at the statistics. All right. The PE ratio, which is the price to earnings ratio. The PB ratio, which is the price to books ratio. We'll start with those, the PE ratio and the PB ratio. All right, now the PE ratio is price divided by earnings. So the earnings that you'll take is the revenue for the trailing 12 months, all right? And that's what gives us this number in here. Now, generally, when the market is kind of chill, we would see like SPY. I'll use SPY as an example. That PE ratio is like generally between about like 12 and 16, I believe. Right now, we just don't have that. We don't have numbers like that. On average, we're more so between about 12 or 25 to 30 for the P ratio. So again, it's just the price per share divided by the earnings for the trailing 12 months. I think y'all had a chance to read that. So as I'm looking at this, ooh, Lord. Oh, annual. Let's go to annual. I was like, that always throws me off if I look at it quarterly. Ooh, currently, my goodness. This is high. Look at that. That is high. That is a high jump. And then if I look at the price to book ratio, this is showing like the value of this company. So you take the price per share and then you divide it by the book value per share. Well, it's the result of dividing the current market share, well, the same thing. So yeah, just trying to find like the best definition to read. So the price to book ratio shows how much value is in the company relative to the share price. So book value is the sum of all the company parts if it were to be liquidated today. All right, that's key. A lower price to book ratio may mean a company is undervalued because it's trading for less than what it's worth fully liquidated. You want to buy a good company when it's undervalued. All right. We could even say we could even word it as you want to buy a value company when it's undervalued, because that means that you're getting the best price, or you're getting a best price versus buying a value company when it's overvalued. That means you're just buying it high. And our whole point as investors is to buy low so that we can turn around and sell it high, right? So are we on annual? Yeah. So annually, seeing that this is so the highest PB ratio we've had is 1.90 in 2018, or 1.91 in 2017, 21, 1.88, 22, 1.6. So this is it. I would say, just from looking at this in here, right, that the highest was 1.91. And I'm even honestly going to go a step further than that. I'm going to find the average for all of these years that are pulled up. So I just have my calculator pulled up, and I'm going to take 1.43 plus 1.91 plus 1.90 plus 1.38, 1.32, 1.88, 1.28, and then the 1.56 is current. I'm not going to do that one. So we have 1, 2, 3, 4, 5, 6, 7 years. So 11.1 divided by 7, 1.58 is the average. And we're currently at 1.56, which is telling me that right now, Micron is currently trading at, I don't want to click off all of this. Micron is currently trading at $68.17. So this kind of telling me that this might not be a bad place in here, in this 68 range. And we know that it just broke out of that ascending triangle on the daily. So it should pull back to that trend line. I think that'd be a good time to buy shares. Screw it. Let's look at it real quick. So we had this ascending triangle here because we had the equal highs, many equal highs for quite a while, from November all the way through to May, with higher lows, meaning that sellers were stagnant and buyers were putting in that work. Okay, it's a bullish chart pattern. We came up here, broke out of it Thursday, Friday, got a little bit closer, but we do see from Thursday with that, well, Thursday was a spinning top, so pretty indecisive regardless. But we see that it just stayed in here from this upper wick in this sell zone. So I wouldn't be surprised if this did pull back some. I would actually love for it to pull back a little bit. And I think that there's a good chance that Micron could have big movement, for the simple fact that NVIDIA has earnings on Wednesday after hours. So we'll see it Thursday during the day. So same sector, right? Same sector. Well, we'll take it a step further than that. Same industry. Competition. So NVIDIA moving and grooving should allow Micron to move and groove, because we already know, I don't know what direction it's going to go, but we already know NVIDIA finna do something. We already know that. We know that let me pause this real quick, because I'm going to put this on YouTube. Okay, so now we're, all right, so let's come back over here and look at our financials. Sorry, YouTube, I have to tell my baby something real quick. They better not. I'm just saying, don't do it. Don't do it. All right, so let's come back over here. So I am liking that though with the the PB ratio. All right, that average for it in the past 7 years has been, what is it, 1.58? So I look at that. I do the average before I go buy a company, or before I go buy shares. I want to see what the average for the PB ratio is, see what it currently is. And as long as it's lower than that, I feel confident to buy some shares. All right. So that's how I'll use that. And then down here, we have the profitability ratios. Like, this is the profitability of a return on assets. You know, we ain't looking too hot right now, but again, y'all gonna get tired of hearing me say this. It's a supply chain issue, and who's worried about Micron when Nvidia is doing what it do? Oof. Y'all haven't had soda in like 2 weeks, and it's hitting the spot. It's in the spot. All right. Now, also the liquidity ratios, I like to look at this as well. And I want to look at the asset turnover and as well as the inventory turnover. So let's look at these two. Now, the inventory turnover would matter to me more depending if it was like, I'll say Walmart, right? I care way more about the asset turnover in that sense, but still look at it on everything. Honestly, I'm going to be real with y'all. I look at all of this. All of it. All of it. Now, do I always remember what every single one of these definitions is? Nope. But this is why I love TradingView. Don't have to question it. So the asset turnover is the revenue divided by the average total assets for the last period. Or if I think it's for the last 3 periods. Oh, no, for the last 2 periods. So what's it mean? It can be used to measure the effectiveness with which a company uses its assets to generate income. So the higher asset turnover is, the more efficient the company is, since higher ratios mean that the company is generating more income. All right. Whereas if the company has a low asset turnover, this indicates that it's not using its assets to the best of its abilities. Okay. So when I'm looking at their asset turnover, you kind of low. We like that comparative to what it normally is, right? So the highest we've had is 0.70. The lowest by the end of the year is 0.42. And then again, I care about like the inventory more so, like, you know, if it was like Walmart or Target or even Starbucks, because like their asset turnover has more so to do with the drinks, with their drink menu, right? All right, and then dividends, we already went through and we looked at this. I like to pretty much like this dividend payout history is what I'm looking at, because I want to see, are they increasing? You know, you can eyeball that and see if they're increasing or decreasing. Annually, they're increasing annually from 10 to 12 cents. So, you know, I'd like to see by the end of this year if they're going to increase, but baby, after what we saw on that free cash flow, I'm going to assume no. Prob's not. I'm going to go ahead and make the assumption that probably not. We're not going to get an increase there, right? Because we did have an increase from 2021 to third quarter 2022. So if we come back and we're looking at, why does it keep their free cash flow 2022? Yeah, they were able to increase their free cash flow then, so that makes sense. They increased their dividends then. We're a little broke right now, so I don't know if I'd necessarily expect to see that, right? Don't think I would expect to see that. The earnings, we went through all of this, and revenue. Okay, so let's look at revenue. Now, this page, I absolutely love looking at. I love looking at this one in here. Let's unhighlight all of it up here. All right. So this is just the currency. Okay, it's the currency. And it's gonna break it down into all the different ways that they do make their money. So, right, we have the mobile business unit embedded. So I just like to see like what's bringing in the most, and it does it by order. So they make the most money from their compute and networking business unit. The least amount of money, but the least amount of money from their storage business unit. What are y'all storing right here? All right. And then we're able to see which country is bringing, we'll say which country is bringing in the most. So this is going to be the US, Taiwan, China. Now, while we're looking at that, I want to come on over here and look at China. or look at some news that came out today about China. Actually, let's go back over here. So I think we've looked at all of this. So let's come back over here. And if you're on here where you see the lightning strike, this pulls up headlines. All right. So this is what I want to look at right here. This just came out this morning. Beijing bans Micron as supplier to big Chinese firms, citing national security. Yeah, all right. China's banning major Chinese firms from buying from Micron Technology, saying its products pose a major national security risk, capping an investigation that underscores strained relations between Beijing and Washington. Okay, politics. Significant security risks. Let's see, I haven't read this article. This is the Washington Post. Oh, the Dow Jones Newswires. And Micron is saying we are evaluating the conclusion and assessing our next steps. Basically, oh shit. We look forward to continuing to engage in discussions with Chinese authorities. Y'all know that's not going to happen. Came less than 2 months after Beijing announced an investigation on imports from Micron, the largest memory chip maker in the US. And what seemed, a political gesture aimed at hitting back at a sweeping ban Washington put in place late last year on selling advanced chip making technology to China. All right. So again, we done said it plenty of times. It's a supply chain issue. Okay. I ain't gonna get, let me pause this again. Child, I forgot what I was saying. I had to give my political opinion over here to my babies again. Sorry about it, y'all, but I would just say have your ear to the ground when it comes to China and US relations if you are deciding that you want to trade semiconductors at this moment. Okay, so if we come back over and then we do want to go back and look again at their the statistics. Revenue. Yeah. And we're down here and we're looking at their revenue. I mean, that goes away. That's 3.3 billion going away. All right. Now, after you have dived in and you've looked at all of this and you've written everything down, right? Because we're not just going to look at this and think that we're going to remember all those numbers. Because I'm going to be highly impressed if anyone remembers what the revenue was in 2021 for Micron, right? So after we've written all of this down, now my research is still not done, baby. Still not done. And I'm still just here on TradingView. Haven't even pulled out my other resources. The next step that I gotta do is now I gotta go over to Micron's competitors. And I gotta do the same thing, write down the same numbers, and then I want to sit and see which one of y'all is doing the best. So if I want to find Micron's competitors, I like to use, well, this looks cute. Okay, not y'all got a new screen going on here. Okay. New, give your eyes a break with our light and dark mode. Okay, FinViz, finally. All right, so if I come over here and I'm looking at their at the stock map, and I'll come over here to the semiconductors industry inside of the technology sector. And I'm gonna change the performance. I want to change it over here to the year to date. Don't be fooled. So if I come over here and I'm again looking in the semiconductors industry, I just want to see who their competitors are and who's having the best year and the worst year, right? So we can see by looking at this, who's having the worst year is Qualcomm. They're down 0.37%, all right? And who's having the best year? NVIDIA. I think I said 125. Well, we have had a pullback at its peak. This year, I think it was up 125%. So up 113% year from January till now. It's sickening. Yeah, I mean, it's absolutely sickening. how good of a year that they have had. And just to know that we got into this swing trade down here in like where did we get into this swing? And I'm gonna talk to y'all about Baba. Okay, I'm gonna talk to y'all about Baba. Don't worry, because baby, y'all was not gonna let me make it on it last week. Minute we get in. Oh, I deleted my chart. It's all right. Let's finish the mission. All right, so we're gonna come back over here to NVIDIA, and again, like I said, I'm gonna be doing the same thing and compare the same thing. Okay, now one thing I want to point out is, so let's just look, and we're going to look annually at the free cash flow for NVIDIA. In 2022 they had 3.81 billion in free cash flow, which was a decrease, but we're just going to know they had 3.8 billion. If we come to Micron and we look at their free cash flow in 2022, annually, 3.1 billion. Are they doing the best right now? Nah. But don't we like to buy a good company when maybe they're kind of affordable and not doing the best right now? Yeah, we do. We do. Because y'all, I just know y'all know I have a plan mapped out. I just know y'all know. I just know y'all know. Right? And so that is what I do. And that is how I do research using TradingView, or well, I'll say fundamental analysis research using TradingView to look up these companies and to see if it is a good time to buy it, a bad time to buy it, and how I use it all to lead me down a rabbit hole on the news. And as far as technical analysis and looking at what it is that I want to trade and where I would want to enter into for my trades. Well, clearly I need to mark this off right there. About in there. Let's look on the weekly. Yeah, let's look at all this. This is the supply zone. Period. Let's look at the moving averages. Okay, period. What is this, my 100 on the weekly? We got Micron closed above the 100 right in here in this supply zone. Broke above the 200 and then closed above the 100. Where are we at on the daily? Above everything in this supply zone right in here. Oh yeah, period. We finna eat. I really want y'all to know that we finna eat on this one. All right, YouTube, I hope that y'all enjoyed this quick video but in-depth video on how to do fundamental research on using the platform TradingView. Make sure that you click the link in my descriptions and come over and join the winning team, join the Wall Street Ben Black family. Yeah, link in the bio. Bye. I'm still here, y'all.